could have a fifth class of property life insurance. And life insurance is treated in many ways differently than the rest of this property. Notably, with our life insurance in place, any death benefit from a life insurance policy will be paid tax-free. When you pay your life insurance premiums for a life insurance policy, you use after-tax or already taxed dollars. Because it's already been taxed, at the time a life insurance death benefit has to be paid, it's going to be paid tax-free. In addition to not being taxed now, so we know we'll bypass taxation, it will also bypass the claims of your creditors. That is, if you happen to owe somebody money at the time of your death, and you have a life insurance policy in place, and you name a beneficiary other than the estate, we'll talk about naming the estate as beneficiary in another session, but if you name a beneficiary other than the estate, then that amount will flow to those folks without your creditors being able to access it, which would be very attractive for you and likely for these folks who survive you. It will also bypass probate. So we don't have to worry about this little bit of tax or fee that the province that we reside in happens to assess at the time of your death. Also, we will bypass the will. Now, I'm a big fan of a will. I believe that most Canadians should have a will, and probably most Canadians don't have a will. However, the will does have some limitations. What we'll find is as the property flows through the estate and to the will, this will now is a matter of public record. What that means is that anybody on this side of the wall of death can see what's happening with my will. My life insurance, though, is treated differently, assuming that I named the beneficiaries in my life insurance policy after I wrote my will. What we will find here is property will flow all the way around these processes untouched. This can be advantageous because it means the property will flow very quickly. It won't be held up by this process of probate, nor can anybody who is on this side of the wall of death see what's happening with that death benefit. That allows me to leave whatever death benefits I want to whomever I wish to leave them to without anybody else finding out about it. This is not a matter of public record. It's a private matter between my insurer and my beneficiaries at that point. The wall of death, to review, shows us what happens with the property we own during lifetime on death and how we can use life insurance at that time to help manage this process. That is, you might have some capital gains to pay on that capital property. Great. Who has to pay the capital gains? Well, properly, my estate does. How about this? I take out a life insurance policy. I name my estate as beneficiary. I own a cottage here, an example of a piece of capital property that I might own. The cottage, while flowing through this process, is going to attract some taxes. I'd like for those taxes to be paid such that the cottage can pass on to my children, grandchildren, what have you. So what I do, I figure out approximately what the tax burden is going to be. I take out a life insurance policy in that amount. I name my estate as beneficiary, although there are some other possible approaches here, but I name my estate as beneficiary. And now what's going to happen is the cottage gets here, my life insurance death benefit arrives at the estate. Revenue Canada says, we'll take some of that life insurance death benefit. There you go, taxes paid. The cottage flows through this process and ends up over here. Another important element to recognize here is that if we do name our surviving spouse as one of the heirs for this property, anything that goes to that surviving spouse, the taxes will be deferred on. We have a very specific type of life insurance policy that we can use to manage that tax deferral. We can take out a life insurance policy called a joint and last to die life insurance policy. And with that joint and last to die life insurance policy, no death benefit will be paid until the last of our spouse or our taxpayer, our income earner, whatever we have, passes on. So it's only until the last of them is gone that that death benefit will be paid. I would suggest that you become familiar with the wall of death. This actually helps to answer somewhere between 5 and 10 exam questions that show up both on the certification exam and on the provincial exam that will follow. Thank you very much. I look forward to seeing you again for our next presentation of the LLQP video series.